Hello, good weekend. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 29th of May. Now, this is a holiday weekend for us. We'll put out this report on Sunday. There will be no report or newsletter on Monday due to the Memorial Day holiday in the United States. So let's start out by looking at the macro picture of the entire financial market, and then we'll kind of zoom in on our crypto assets. What we've seen over the last several months has been a market which is anticipating higher interest rates. This is inflation. This is an economy, an expansion. This is a drop in future interest rates. And this is potentially an economy in contraction or maybe even recession. So what we have to figure out over the near future is this is the path that the Fed is on. It wants to raise rates. It wants to tame inflation. But we may have seen that start to turn down as of Friday. We had an important indicator that shows that consumer inflation is starting to be tamed. Could be due to demand destruction. We don't know just yet. So what I want to see from this is I want to see the interest rates going in the direction that the Fed wants to go. That means that the market's not fighting the Fed in terms of the bond market. But if the bond market is starting to go in this direction and the Fed is going in this direction, we have a big disconnect. And that is eventually going to lead to a broken market where people realize that the Fed is out of touch with what's going on. It's my own personal opinion that the Fed is way too late in this process. They should have started last year, but they were saying that inflation was transitory, which is a nice way of saying just a spike in inflation. But so far, we haven't really seen that due to all the supply chain disruptions causing scarcity in the market. All right, so we'll keep an eye on that for right now. Something else that I've been talking about lately is saying that the crypto market has been coupled at the hip with the tech-heavy NASDAQ assets. And this has been true for the last several months here as we've experienced not only a bear market in crypto, but also in tech assets here with the NASDAQ. This has been particularly hard hit when we look at US equities. But we've had a massive rally over the last 3 days in the market, Wednesday, Thursday, Friday. Of course, it's closed over the weekend and a long weekend here. We don't know what's going to happen come Tuesday when the market opens up again. But this has been a very strong move, and it has not been matched by that of crypto. So crypto, on the other hand, if we just look at Bitcoin, which is a proxy for the entire market, has stayed within this triangle consolidation, bear flag, whatever you want to call it, and not looking particularly good right now, certainly not strong, not going along for the ride with the rest of the tech assets, which have been squeezing like crazy for the last 3 days. The next chart here is the Crypto Fear and Greed Index. I don't use this all that often, but occasionally during market extremes, it's helpful to look at something like this as a kind of a contrarian sign. So what we're looking for here is any clusters that are down into closing in on the single digits near 10 or so. And we've seen these over time, several times now. It seems like crypto is eternally in a bear market all the time, doesn't it? And if we map these out to actually what's happening with BTC versus the US dollar on the weekly chart, we can see that most of the time, these clusters are leading to a relative low. So it does act as a contrarian sign, does act as a relative low. The only time that I've seen here where it didn't, and I'll point this out in a second here. So this is September of 2019, where we started to see a cluster here. And then this led into lower prices where we actually had a higher value on the Fear and Greed Index. So we'll point that out in a second. We'll come back to that and see if we have any relationship to what's going on right now. But certainly since the pandemic, anytime we've had a major cluster of the fear and greed down near single digits, this is what's resulted from that. So even a relief rally, I think at this point would be welcome, but are we going to have to get into similar period to 2019. So let's go back to that 2019 level. And this is what I want to show you here is that the price actually made lower lows while the indicator, this fear and greed, actually made a higher low. So that is a positive divergence. And I'm wondering if we have to go through something like that where we end up making a lower low in BTC versus the US dollar, maybe as low as 20,000, while the fear and greed recovers from that and sets up a higher low and shows us positive divergence. So we'll keep an eye on that. I'm a big fan of looking for divergent signals in these types of sentiment indicators. So now let's go over to the charts and go through the top two, certainly for now, cryptos. This is my North Star chart. This is a monthly chart of Bitcoin versus the US dollar on Coinbase. And we're looking at the log scale of this. You can see the log scale is very, very different. It goes exponentially higher as the price goes higher. And this does make more sense when we look at a chart like this that has gone berserk as it has. You know, it's interesting that we started our service about 4 years ago, and it was about right there. And since this time, the majority of the time that we've been in service now, we've been in these corrective markets. There's only been a very short period of time where we are in a primary bull market during this entire time. And this was during the period from 2020, the bottom of the bull, the bottom of the bear at that time, into really, I would say last November was, we had a primary bull in play here. So you can see these primary bulls can be very, very strong, but they don't necessarily last for all that long before they go into the next corrective. And this is our next corrective. And I was doubting, like, seriously, after going through 3 years of this, are we going to have to go through this again? And the answer is yes. Anytime you have these type of parabolic markets that just go, berserk to the upside, we went from, seriously down here about 5,000 all the way up to 66,000, I think was the actual high. You're going to have to pay for it. We have to digest these gains. And a lot of times we end these with a scary little move at the very end. And this is kind of what happened here during the pandemic. The crash move on the pandemic created so much opportunity throughout just about every financial market. If you look at everything that was out there, even precious metals, equities, everything like that, they all crashed during that time. And then people bought them like crazy. So we're still going through a digestion period. Now, compared to this bear market, this one is actually a little bit more controlled, at least on the log scale. It looks more like a bull flag, quite honestly, than anything else. I think we still may have a little bit more downside to go. I think there's a good case for this doing a swing test down here. And that may be the similar move that we had down here. Like we always say this, if you want the price to go higher, it's got to go lower first. You've got to pick up excessive amounts of bearishness, which has to be squeezed out. So there was a massive amount of bearishness down here, which got squeezed out because people had to buy back their positions. And this was institutions as well that caused this problem. And this will be the same deal down here. So I don't know if we still need to get down here. There's a good chance of that divergence that I talked about. We may end up making a lower low down in this area. I'm a little disappointed that the crypto market has not gone along for the ride. Now, today we have positive. This is Sunday morning. I'm recording this. We have positive numbers, but this is nowhere near what the gains that the equity market, especially the NASDAQ, experienced in the last couple of days. So I still think it's reasonable to expect the price to go lower to do the swing test down here. So this is why I'm still looking for a test of 20,000, maybe an undercut of that level. It should be short-lived. I think there would be a massive amount of, there's going to be stops down in this area. So this is why I think that the area will be undercut below 20,000 and would cause one of these. It looks like this more on the chart on a shorter time frame, a waterfall decline which pierces through that level, but then immediately gets bought up. Because there's going to be a lot of stops down there underneath 20,000, but there's also going to be resting buy orders down there as well too, myself included. So look for some type of panic. Remember, this was a panic move down here on the pandemic. There may be something that crops up in the next week or two, month or two. I don't know how long it's going to take, which makes everybody go, all right, that's it. I can't take this anymore. And that's going to be a capitulation move, which typically accelerates this whole process. It goes down much faster, but think of this as almost like pulling a rubber band back, and it snaps back and it causes that squeeze to the upside because of the excess bearishness. So I still think we're going to have to go through this move, and that's based on nothing other than having seen this countless numbers of times. So now let's go in on the weekly chart. Let's take off the log, and we have a move which is now transitioned into certainly a weekly downtrend. If we put this on the RSI Laguerre, we can see that we're closing in on exhaustion to the downside. So this has been a very linear move, and we've seen this across every major financial market over the last several weeks. This is almost 2 months straight down for the last 2 months, and it's been kind of a grinding move. This is why we don't have exhaustion yet, but it's closing in on this. So to me, this also means that the amount of downside potential right now is limited. I don't see this as like continuing to just grind down there. We may be stuck in a flag for a little bit longer before this flushes and then moves like this. Now, when we get down to the daily chart, we're seeing just an amazing amount of energy here. This is huge, and it rarely sits there for very long. You can see that when we do usually get into areas where we have a lot of energy, the price will move. And there's no predicting which way it's going to move. This is why we watch price action. But every time that we do get a super high value of this, here's a good example of this back here. Super high value, we get movement. So I'm thinking we're going to get movement here real soon in one direction or another. It's just waiting on a catalyst. For those of you adept with options, a straddle may be an appropriate strategy for the near future. Okay, looking at the next asset here, this is Ethereum. This is not fared as well as Bitcoin. Bitcoin has been a little bit of a safe harbor lately compared to all the other assets. This is continuing to transition into that downtrend. So we are moving ever closer, and the level that we need to watch for here on Ethereum is going to be this swing test level, which is right around 1400. So this to me is the big prize at the end of this is 1400. Maybe stops are being held down there, but that's a major swing test on the monthly chart. Going through the rest of these, we haven't really seen much of anything. They all look the same. All the charts look the same. The only coin that's had any strength whatsoever lately has been Tron, and Tron still stays relatively, who'd have thunk it, right? That Tron would be the paragon of strength in this market. But this is really what we're looking at right now in the top 20, is that all the assets are kind of mimicking and mirroring Bitcoin and Ethereum and waiting for the next catalyst, waiting for the next break. I think it's probably going to be to the downside. But again, let's keep our options open. We don't know what the future holds. That's it for this weekend's report. Again, folks, there will be no report on Monday. We'll be back on Tuesday, and we'll talk at you then.